Although the market traded soggy today in the Dow in the early stage this morning, it still was an indication, or we could see it was an indication using candlestick analysis, that it was merely profit taking versus a reversal. Now, we saw on Friday where after a doji we had a bullish open. Pre-market futures were bullish, which told us that they were taking it up after a doji, putting us right back up into the middle of the trading range. Today's pre-market futures were a little bit soggy, down a little bit. Was this a reversal, or was this just profit taking? Well, notice how the Dow came back down and used our 3T line as support and came back up. But during that time, there was other evidence that this was just a profit taking day versus a reversal day. And that was by analyzing the NASDAQ chart. The NASDAQ chart opened lower, and then after a little bit started trading back up above where it opened. Now, most investors would have looked at that saying the NASDAQ is down and the Dow is down. That's not a bullish day. The candlestick investor has the advantage of seeing that once they started trading up above the open, that gave you very simple information, that there were still bulls trading in this market, even though it was trading lower, that there wasn't a mass exodus coming out of this market. Using that simple common sense for analyzing what the general market trend was also allows for taking advantage of price patterns, such as our recommendation of BVSN over the last few days, where if this was wave 1, wave 2 of a J-hook, buying on a positive open starting wave 3 told us that this wave should be equivalent to wave 1, provided there wasn't any major change of investor sentiment in the market in general. And when we could analyze that that was not occurring, we stay with our position until it can fulfill what the price pattern or chart pattern tells us it could do. If this was wave 1, wave 3 could be up in the $55 range. It also provides the confidence to be buying in a chart pattern that's up near its high, except this CIE was recommended as a buy if it was trading positive because of this small rounding bottom that was supporting right on the T-line. The T-line is our 8 exponential moving average, a very effective method for telling us when to be in and out of positions using candlestick signals. It opened lower, but we could see immediately the bulls were back in this trade once it came back up through Friday's close, got us in at an opportune time. Watching the visual aspects of candlestick analysis helps investors show or identify where the buying and selling pressure is coming into individual stocks, despite what the general market conditions are. That'll be it. We'll see you in the chat rooms.